Time for another stock review. We're now talking Impinj, ticker symbol PI. In this review, we're going to do a full review looking at the back test, the profitability score, the solvency score. We're also going to look at the website. We're going to look at the excuse me, we're going to look at the back test against the S&P, latest news. What is the company? What's it all about? Looking forward at the earnings. All of that's going to be covered in this review. We're going to find out if you can actually make money from this company. Is there a way to make money, as we are all investors here and we're looking for great businesses, innovative ideas, and able to make some money. We are talking a bit of tech here today as well. We are bringing AI and intelligence and software, and it's a very interesting company. I think you're going to like this one. So sit back, buckle up, and be in the knowledge you're about to get the most honest review you've ever seen. I'm not sponsored by the company. They don't pay me to promote this. Where I put the reviews afterwards don't pay me either. I'm doing this for my benefit, for the benefit of my members, to provide the best information. And also note that I don't own any stock. I only own the S&P, but I'm fully invested. All of my money, every single penny is invested in the S&P. I do that so I can do the Meet the CEO series. I'll talk to you about that in a minute, where you can invite the CEO onto the show. We've done more, and we've done them in the past, and we've got many more lined up in the future. So the CEO can come on and tell us all about the business. I'm here to be completely impartial, but I do want to promote great companies. I want people to learn about great companies, make money, and very, very quickly we rank number one for most of the stocks that we cover on YouTube, and we're doubling the rate of our growth every single month. I expect within 7 years we'll be at 10 million subscribers, which will make us the biggest financial channel in the world by a long way. Anyway, let's get straight into it. What are we looking at today? PI, Impinj. What is it? I don't know. Never heard of it until now. One of my members asked me to cover it, so I am. So without further ado, let's start off nice and simple, and let's get more detailed as we go. Please do click subscribe and ring the bell if you like this, and tap the like button. I will reply personally to all of my members below in the description. And also, if you want to talk to all the investors, there we are on the extra channel behind the scenes, 12 hours a day live, members only. No one pumping, dumping, promoting stuff, just sharing facts so all our members consistently support each other and make money and make friends along the way. We have a bit of a laugh now and again. Anyway, this video isn't for that. That comes up in a minute. Well, you never know. I might throw a bit in. I can do what I like. It's my show. I'll do what I want. Anyway, Impinj, what is it? I have no idea. Let's have a look. There you go. You can see how it's traded. Nice chart, but definitely an opportunity stock. Opportunity stock to make money. It does look like a trading stock, even though it's trended upwards of 581% over this range here from 2016. Very nice indeed. Look at that. Looks good so far, right? Okay, what is it? Impinj Inc. engages in development and sale of radio frequency identification solutions. Is this a little bit like those AirTags? Is it? Well, we're going to find out in a minute from Apple. I don't know. The company was founded by Christopher Diorio in April. Christopher, love to have you on the show, and we'll talk about that in a minute, how you can come on the show and my investors can get you on the show. It's really exciting building a community around the stock. Anyway, let's have a little bit, see a bit more. Based in Seattle, WA, the listed name is PI, founded in 2000. Washington, Seattle, Washington, 475 employees. Christopher Diorio, lovely to have you. Love to talk to you, Christopher. So, how can you be on the show? Well, I never message anyone. I don't sell my services to anyone. However, my investors and my viewers will contact you. They will want you on the show because they care about their stock and they want to hear from you. And we rank number one for most of our stocks that we cover on Google. So why wouldn't you want to be on the show? So how do you get on the show? Well, the viewers watching this right now, you can look below in the description of this video and you will see invite the CEO a video, which is what you pass on to them. Helps it make it a little bit easier. You can also send this video on, maybe your investor relations, you email them, or you create your own social group, maybe Facebook pages or a Reddit channel, and I will help you grow. I will supply you with the earnings. If you ask me to cover the earnings, I'll cover the earnings. Breaking news, I'll do all that stuff, and you can get all that information and build a family. They'll get to hear about us. Communicate with them. When they get excited and they want to be on the show, then finally, last stage, you put them on to me and I'll have them on the show. But I want you to be fully involved. It's your stock, your company. You own it. All right? Okay, let's move on down. That's how that happens. Now then, if you're buying it on margin, it's got a 30% margin. So it's regarded as relatively low risk. 25% is the lowest, so it's relatively low risk. And 3.3 billion is the market cap. Nice. The 52-week high is 142. 52-week low is 48. Negative price earnings ratio of 76.33. No dividend, just growth. Hardly any movement at all here. Average volume, 214,000. It's a very, very low volume stock. Not many people showing much interest into this stock. That's all about to change. When we cover this stock, I guarantee you one thing, you will start to see it around Google and YouTube. 100%. No one's talking about it at the moment. No one's trading it really in any sort of volume. Anyway, whatever. Let's carry on. Morningstar. Don't listen to Morningstar. They get paid to say these things. They say it's a strong buy. Fine. Maybe it is. Maybe it isn't. I will decide that for myself and share it with you in a moment. As you can see, we have been making money. The company was making money up here. Look, doing nicely. Started to fall away. And now has become negative, or literally just about negative. I can't tell from this. It's a very basic chart. We'll look in a minute. But we'll cover the price to earnings ratio and we'll look at the earnings in more detail. But it fell off a cliff here. So I'd want to go to the investor pages, which you can do, or if we can speak to the CEO and go, what happened here? You were doing okay. You were making money, going sideways, and then boom, what happened here? We could find that out on the investor pages history and see if it could put it right put it right. Anyway, we did beat on earnings. We did beat on earnings again, and we're starting to improve. And now expectations are up again. Will we beat? Well, if one of our members loves this review and wants me to cover the earnings, give me a super chat and I'll get up early in the morning or go late in the evening and I'll cover the earnings for you just for a super chat. Yes. Okay. It's apparently available on April the 24th. No link yet, but that is the scheduled date. Who else buys this stock? CrowdStrike, Block, Shopify, Trade Desk, Twilio, and Salesforce. I look at this because it gives me an indication of how it will trade because it tells me the company it keeps. But honestly, I've never reviewed any of those stocks. I've heard of them, obviously, but I've not reviewed them, so I can't give my opinion. All right, tap the like button, subscribe, and ring the bell. Are you ready for some more information? Of course you are. Let's get straight into it. Tap the like button. There you go. If you leave a comment below, I will reply to you and I will answer everyone's questions. So can you make money? Does it stack up? Well, before we look at the money side of things, let's go and take a closer look at the business itself. A bit more about it. What is it all about? You're still unsure what it's about? Okay. Let's have a look. This is Impinj, their website, and based in the US, of course, enabling a boundless Internet of Things. You've all heard of that, IoT, the Internet of Things. Impinj helps visualize and optimize your business by wirelessly connecting everyday things to the Internet. All right, then. What else can we connect to the internet? Anything in this studio? What about my bell? Can we get the opening bell? Can we connect that to the internet? Put a little tag on it, and every time I ring it, it lights up and everyone goes crazy. I'd like that. If you're listening, tune in. Can I have that done? Anyway, extending the IoT beyond boundaries. Impinj enables digital transformation by extending the internet's reach from the cloud through edge connectivity device all the way to physical items. Our connectivity platform provides a foundation for our partners to develop IoT solutions that help you visualize, analyze, and optimize your business. If you purchase apparel from retailers like Macy's or Zara, run a race like New York City Marathon, enjoyed a drink from Coca-Cola Freestyle Soda Fountain, or check bags at airport worldwide like Las Vegas, McCarran, then you've probably interacted with Impinj. I didn't even know I'd done it. What's going on? I didn't even know this was happening. This is the thing, innit? This is the thing with the Internet of Things. You never know whether you're connected or not. I need to know. What is this? What is this device here? What is going on? I need to know. Maybe the chair I'm sat on is connected and no one told me. I don't know. What about enabling IoT solutions? The Impinj platform lays a foundation of Internet of Things solutions development, extending the internet's reach from the cloud through edge connectivity devices all the way to physical items. Our broad partner ecosystem uses our platform's best-in-market products, capabilities, and technology to deliver solutions that address business needs. Wirelessly connect everyday items, identify, locate, and protect them, and deliver data through those items to applications like inventory management, asset management, and shipment verification. Easy to deploy and use, our platform delivers performance unequaled by mix and match approaches built from other vendors' products. Yes, we want a one-stop solution, not a mix and match. I totally agree. I'm right with you with that. I like this. I like this company. I think this is sounding interesting. The sort of thing that I'd be interested in. Yes. I think we're getting more connected in the world, and I can see the benefit. It's not just, in case you're wondering, where's my keys? All right, of course it could do that, but it's about gaining information about things, and like perhaps I'm straight off the top of my head thinking maybe inside your fridge you can see if you've run out of milk. Connects to the internet and says, "Oi, Amazon, order me some more milk." Would you want that? Would you want that? Would you like that idea? I'm not so sure I'd want that. What do you think? Anyway, let's look a bit more here. Impinj Raids. This is some investor news for you. Provides connectivity. We've read that. Integrated RAIN RFID products are easy to deploy and use. Here we go. Look, you got tag chips. There you go. Can I zoom into this? There we go. Tag chips. Impinj tag chips provide unique identifiers, enable smart connected things. So there's a little chip, right? So we can put a chip in something. I'm loving it. Impinj chip readers provide a foundation of designing devices with enabled RAIN RFID read-write capability. Impinj RAIN readers, devices that identify and locate connected things. Okie dokie. We're getting an idea of what this is all about, right? We're getting an idea. We understand a little bit about this now, do we? Do you all feel comfortable? Shall I zoom in here? We've got a little video here. Let's have a look. Shall we play this? Let's get a bit of information here. Let's read it. Let's watch this. All right. Impinj, it's only like a minute long. Let's do it. Digital life for everyday items. Okay, let's have a little look. Impinj connects real item data to enterprise business applications to increase sales and delight customers. All right, to improve patient outcomes and increase efficiencies, to automate processes and streamline operations. Impinj delivers item intelligence for the Internet of Things. There we go. Is enough information for you? Right, let's now go into some latest news and then look at the numbers. Can we make money from this? We've just got some breaking news here on the company, just out a few days ago. In fact, about 3 weeks ago, thereabouts. And I apologize for looking the other way. It's a bit small. I'm going to use my mirror screen. The text they've used wasn't Martyn Lucas friendly. They didn't know they were going to get on the telly, all right? So anyway, a leading RFID provider and Internet of Things pioneer today announced a successful settlement of its patent disputes with NXP Semiconductors. As outlined in an 8K file with the US Securities Exchange, the SEC, today the agreement terminates all pending legal proceedings, release each party from liability for past patent infringement, and licenses each party's patents to the other. Also releases resellers and end users from infringement claims for the sale of the use of the parties' UHF RFID products before the date of the agreement. There you go. If you might want to pause that and zoom in if you want to read more of that. But they've announced a successful settlement of the patent litigation, or patent as we say in England, patent as you say in America, or is it vice versa? Not sure about that. Anyway, important, that got solved. Anyway, without further ado, let's get into the money of things. Does it all add up? So, are you ready? Have you tapped the like button? Have you got hot under the collar? Can I make some money from this stock? I don't know. We're about to find out. Let's crunch the numbers, scratch our chins, and then maybe we'll be able to turn on the money printer. Shall we have a look? Yes. Shall we do it? All right, then, let's do it. Here we go. Now then, I like this chart. This is comparing to the S&P, my favorite stock, the benchmark of all things. The benchmark of all things. So we've got the S&P 500, and January 2017 is when we can start looking at this. And as you can see, it popped up, it fell away. Oh, by the way, Impinj is in red. Impinj is in red and the S&P is in blue. Look at that. And it kind of followed the S&P until we got to 22 and it rose on that quite substantially. Here is 22. But then this is what I want to know about. What happened here? What happened here? I don't know. We'd have to look on the investor pages and do a follow-up video, more research, perhaps have the CEO on the show and find out what happened here. But then it came straight back up again though. And it seems to keep doing that, which to me presents opportunity for those that want to trade this stock. You can make money on the way up. I like it. I think this could be a good business for the future as long as the money adds up. And we're coming on to that now. And it's doing all the right things. It's trending up. It's following the S&P. We like it. Right. Without further ado, let's get into the real stuff. Why you're here. Can we make money from it? What is the intrinsic value? Okay, let's have a little look. Here we go. The intrinsic valuation is accurate. No warnings here today. And we are seeing that the stock is overvalued by 33%. Now, I'm going to say, as I've always said, base case 33%, worst case 43%. I am prepared to spend 25% overvaluation on a growth stock. Is this a growth stock? It certainly is. Of course it is. This whole industry is. It's a bit expensive though. And obviously, as we've just shown you from that chart, you've got to buy this in the dip. If you are a trader, perhaps, and the dip was, if I share with you here, it was obviously a good time around October last year, and obviously since then everything's rising again. AI tech in the S&P is rising. Maybe we're not going to get a dip again before we go higher, before we correct. I don't know, but it's a bit expensive right now. Anyway. Even if it's expensive, it still might be viable. Let's carry on. The intrinsic value is 33% overvalued, but you cannot just use that. That's too easy. That's too lazy. We can't look at that. There is limited information available here on this company, but we'll do the best we can, and we'll update you with a follow-up if we need to. Looking at the financials, this is how its revenue has changed over time. You can see things are steadily moving up. Here we are now, December. We were at 307 million. We're waiting for our next report. The earnings will be out shortly. Hopefully, we'll cover it live. If you like it, one of my viewers might ask me to do an earnings for it, and perhaps we could cover it. Anyway, that's a bit of an S-curve here in 25. starting to form an S-curve. That's encouraging. So we're down on 2% on the most recent range, but we are trending up. I'm okay with that revenue chart. Operating income down 73%. You can see something really happened here. I don't know what it is. I'd like to find out, and a follow-up video might detect that. But that did present opportunity back here in December. In October, it was obviously a good time to buy it, like we just said. Since then, we are expected to improve, and that definitely is a nice swing up there going into 25, 26. That's expected, though. We don't know if it's going to achieve that. Net income, again, the same thing, moving up, but we're down 53%. Something happened in October, which I don't know what it is at the moment, but I'll find out. Cash flow, 8.7 million. Investing cash flow is improving. Down 36%. That's good. Operating cash flow up 13%. The cash flow is up 13%. Admittedly, it's all-time lows, but we are improving now. All right. Okay. What about the balance sheet? Not a great balance sheet. I don't like the balance sheet. We've got a lot of liabilities very close to the assets here. 359 million in assets. 359 million in assets. So now you can see why it's overvalued, because you look at the value, you look at the assets, you look at the market cap, and you can see why it's overvalued. Anyway, 359.4 million assets. But the good news is 113 million is in cash. Liabilities is very close to the assets. We don't like that. What about the long-term debt? Long-term debt makes up 86% of its liabilities. So nearly all its liabilities is long-term debt. We don't like that. If you're going to buy it now at a peak price, overvalued price, with a balance sheet with loads of debt, I don't like it. I like the business. I like what they're doing, but I don't like this balance sheet. You'd have to buy this on a dip for me. If I was buying this, I'd have to buy it on a dip. I know things are going to improve, but there's got to be a balance here somewhere. Anyway, let's have a look. Gross profit, it's 49%. Everything else is red, negative. Operating margin, net margin, PCF, FCF margin, ROCE, ROIC, ROA, ROE, all negative, but the gross margin is 49%. Right, let's have a look. The profitability is very, very low, 27% profitability score. So profits aren't great. Solvency is 42%. I thought it would have been a bit worse than that, but solvency score, in my opinion, isn't great. 42% isn't a great score. Short-term solvency is okay. Long-term solvency is okay. High Altman score, but positive net debt. We don't like that. Yeah, quite a bit of debt there. I don't like it. But anyway, because of the projections and where they think it's going, they're not concerned with the solvency. I just have a high expectations of stocks. If I'm going to buy something, I want it to, really, really be proprietary, unique, have a great balance sheet, do well, and all the rest of it. Wall Street are giving a 4% downside worst case scenario. On the average, are giving it a 7% upside, and on a best case scenario, 27%. See, from where it is now, it's overbought. From where it is now, it's overbought, it's too expensive, it's overvalued. There's no point. 7%, you could just buy the S&P and get a 10 or 13, between 10 and 13% with inflation built in. What is the point? I don't see the point with that balance sheet. Best case scenario, 27%. Well, if we had a scenario like this, you'd probably see the S&P do 30% in a year, as we have this year. So for me, it's not a buy. It's one for further interest, further examination. But for me, no. I don't like the debt. The price is too expensive. I like the business, but I think it's too expensive. What about insider trading? Well, over the last 12 months, Impinj insiders have bought 88.5 million of the stock and sold 18 million. That's good. Insiders buying. We like it. When did they buy? When did they buy? When was this here? This was back here in August. There we go. You can see, if we could look at the chart again here, and if we go around about here, August, they started buying here, just here at the bottom. And off it went. Makes sense. And now we're rising up to here. They've trimmed a little bit, and there's nothing wrong with that. Nothing wrong with that. So it's good that insiders were buying it, but it does seem to me that insiders are trading the stock rather than owning the stock. That's good to see them buying, but then they've sold. So not as much, admittedly, but I don't like seeing them. I don't like seeing insiders buy at a bottom dip. I mean, that's fine. But then as soon as it starts to go up, start to sell it. That seems to be a bit like traders trading their own company. I want to see the owners owning the company and not selling the company. So anyway, 14% short interest, nowhere near the volume for a short squeeze, nowhere near the amount of interest of short interest to gain a short squeeze either. So no short squeeze, but just people betting against it. They're betting against it because it's too expensive. The balance sheet, the debt, too expensive. So it's not a buy from me. Definitely not. 100% not a buy. Jim Cramer talked about this stock a year ago. Should we listen to see what Jim Cramer says on Impinj? Shall we have a little listen?
Calling about Impinj.
You know, it is a great company. The problem is it's not a great stock. That's the problem right now at this particular moment. The stock is very...
There you go. Great company, not a great stock.
Very overvalued, but versus its business, which is quite good. You got to wait till it comes down before you buy any.
There you go. Jim Cramer talks a bit nonsense, if I'm honest. Most of the time he throws things around the studio and you can't understand what he's saying. Sounds like a bit... I don't know, it sounds like a little frog or something, doesn't he? I don't understand what he's saying, personally, but that's just me. I don't know, half of it, I don't know. Anyway, that doesn't matter. Jim Cramer says I wouldn't buy it. You might want to buy it because there's a reverse ETF for Jim Cramer, but I think he's right there. It looks like a good company, but the stock isn't very good. So I agree with Jim for a change. That's not very often that happens. Anyway, let's see. Now, like I said, a year ago, CNBC, that's it. So my review will go right to the top. I will probably rank number one on Google very, very quickly. I'm expecting that because no one's talking about it. No one's really buying it. There's not a lot of interest in it at the moment. So my final thoughts on this stock. It's an interesting company. I like what they're doing. It's innovative to a degree. I like it. It's the sort of thing I'd buy. There's a lot of good stuff around here, but clearly insiders are trading it, not owning it. Don't like that. The balance sheet isn't good. Too much debt, way too much debt. Don't like that. That kind of tells you the way that it's being run. It's being run so it can be traded in and out. It gets overhyped because of its internet things. These sort of things do. AI always gets overbought. Do like the way it's following the S&P though. It's one to have a further look at. So I agree with what Jim just said there. It is a stock, potentially a good business, but not a great stock. So it's not one for me, I'm afraid, but it is one for further interest. Click above my head. I'd like to know more about the company. Down below in the description here, and the extra channel where we run for members only 12 hours a day, providing the best service to our members for 99 cents a month. Ridiculous. Right? And over here, the up and down here, you'll find all the reviews I've done. I don't know why I need to do that because it just sits there. It doesn't even move. I should just go over here, more information. That's better, isn't it? But that's more entertaining. That's more entertaining. There you go. All right. Until next time, as always, take care of yourselves and each other.